We're live. Good morning. Good morning. Yo, welcome to another to London Live Market Analysis. Thank God for a new day. Thank God for a new day. Yo, thank God for a new day. Thank God for a new day. Right? Share this link to friends. Good morning. Today is a good day. Right, so straight into the business of the day. um I just have a charge for us. Like I said that we always use first 5 minutes to just talk about um psychology and how to navigate trading with the mindset and the habits. Yesterday we said talked about routine habit yesterday. Yeah? Yesterday we discussed routine. We said as a consistent to become a consistently profitable trader, you must have an habit of routine, right? So today I want to talk about a mindset you should have. Mindset. So the mindset of treating trading as a business. Treat trading as a business. Treat trading. Let's write that in the chat box. I treat trading as a business. I treat trading as a business. So the mindset of treating trading as a business. The mindset of treating trading as a business. Mindset. Mindset. Treat trading as a business. All right. When you treat trading as a business, you won't play around. You won't gamble your way. In a business, losses are costs. The cost of doing business. When you sell maybe a container, you are selling electronics, and something maybe a wire spoil or their cost of doing business. So losses in trading should be seen at cost of doing business. When you have a loss, okay, the mindset is okay, wow, okay, that's a cost. Learn from what happened in the loss and move on. So treat trading as a business. Your trading game will change. You start seeing trading in a different light when you start treating trading as a business. So I treat trading as a business. I treat trading as a business. I treat trading as a business. So that your losses are just costs of doing what of doing business. They are not. It doesn't define you that you are a loser or that you have done something bad. Yeah. Then secondly, I want to charge you that this trading is a skill. Let me send this to the group before I continue. Trading is a skill that you learn, takes time. There is process to every skill. Whatever skill it is that you are learning, right, is tech, fashion, graphics, photography. Every skill takes time. Yeah, agree with me. Every skill takes time. Every skill takes time. So trading is not a different skill. Trading also takes time to learn as a skill. So give yourself time to learn. And also tell yourself that my trading skill will open doors to me. Give yourself that confidence that my trading skill will open doors. All right. Treat this trading as a skill set that will make room for you, that will open doors to you. So let's type into the chat box that my trading skill will open doors to me. Unless if you're not learning the skill sets like with her, it's a skill set that can open those opportunities, investment opportunities. Unless if you're doing it by for play. But if you are learning the skill sets to be a trader, a professional trader, right? It's going to open doors. My trading skill opened doors to me, right? Naturally, people will flood you with money. You can't avoid it. If you are a good trader, people will flood you with money to trade. It's natural because you are a trader, and it is not wise for you to be a trader and only trade for yourself. You know they work that way. You know they work that way. If you are a trader, the next step to scale up your trading is managing funds. You have to get to that place. Unless, okay, unless you want to just trade yourself and making $100, the big bulk comes when you start managing funds, $10K, $100K, and that money will not come from you. Money is coming from others. So you are training yourself to become professional. It is not, don't be afraid, okay? It's just risk management, and it starts now. Start learning now how to manage your risk. Start learning now how to improve your psychology. Start learning now because investors are coming. In fact, people are looking for traders like money day. They are looking for traders that will help them manage their funds. So our plan in Wiser Pips is to raise disciplined, consistently professional traders that will manage funds for investors. That's where we are getting to. That's the dream of Wiser Pips. We are raising hedge fund managers. We are raising traders that will trade for banks, that will trade for billionaires. Because this skill is so valuable that you cannot play small. You can't settle for less. You can't learn this skill and trade for yourself alone. No, they work. You didn't learn from me. So know now that I'm learning this skill, anticipating that in the coming future I'll start trading for hedge funds. I'll start trading for banks. I'll start trading for billionaires. I'll start trading for investors. That's the mindset. So you start knowing how to manage your fund. That's why I encourage people to trade ProFm. I encourage people to trade ProFm. If you trade ProFm, you understand how to manage people's money, right? If you are trading ProFms, you understand how to manage people's money. That's what it's called daily drawdown, maximum drawdown, profit score. So you can't just do anyhow because it's not you will lose the account and it's good. There should be a penalty, a consequence for doing something wrong. Yes or yes? Do you agree with me? People say, firm, there's rule, you lose the account. Yeah, yeah, yeah. Nonsense. There should be a consequence, there should be a penalty for you doing something bad. Do you agree? As a trader, if there's no rule, you will keep on that your bad habits, you would keep on doing it. But when you blow the first account, you lose second one, you lose, nobody will tell you to calm down because you have the skill. It's just reckless risk management and improper psychology that makes trader fail. So 90 percent of traders already have a strategy. You know, they say the failure rate of trading is 90%, right? I can bet you that those 90%, I can bet you that those 90% of traders already have a strategy. 90% of traders already have a strategy. They already have a skill. They already have an edge. Those failures, those rates of failures, right? They already have an edge or a strategy. It's just reckless risk management and psychology that is making them to be in that percentage of failure. Do you agree with me? The failure rate of traders that is 90%. Those set of people, they already have a strategy. It is reckless risk management, improper position sizing, and psychology that is making those sets. So if they can just calm down, this is a business. There is no need to rush. Okay? There is no need to rush. So that's the mindset. Let's change. It's the mindset that will make you to. You already have a strategy. So that's what I want to just share with us this morning. One, treating trading as a business. Treating trading as a business. Then two, understanding that trading is a skill and it takes time. Trading is a skill. It has a process or it takes time, whatever I want to call it. But let me just put it requires, it takes time. It takes time to learn. It's not a get rich quick. It's not what you just learn in a few months. No, it's not what you learn in a few months. Oh. You can attend classes in a few months, but you can't master trading in a few months. You know they work like that. You can attend class, you can understand the strategy but you can't master trading in a few months. It takes time to learn. So just talk to yourself. If you want to, if you are a trader, bro, sis, it takes time to learn. There's so many things you learn, you unlearn. So just sign up for that lifelong learning now. That no matter how long it takes, now here we day. Now here we day. We not go anywhere. No matter how long it takes, now here we day. Because I'm hope you know that trading is generational wealth. If you are a trader, if thank God I learned how to trade. Let's talk chat box. Right? Thank God I learned how to trade. Every trader in every household is, in fact, is a blessing. If you are a trader, that household, that family is blessed. Just a matter of time. If you are a trader, that generation don't be. It's just a matter of time. So it is you that will now say, oh boy, I need to sit up. Oh. Thank God I learned how to trade. Thank God I learned how to trade. A trader. That's why one of our vision too is to make trading a household name. I want to see that in every household, at least there is a trader because I know what it takes. Even if you just learn trading today, you're already a billionaire. You just start learning forex today, you're already a potential billionaire in dollars. Unless if you want to play small, because the market is in seven. Let me open your mind. Every single day, $7 trillion plus is available in forex daily. Daily. Now, one of my role models, I've been studying this guy, is George Soros. If you look at my screen, I have him here already. I have him here, George Soros. I've been studying this guy. This guy, a single day, did over, is it 1 or 10 billion dollars, and this happened in 1993. George Soros, famously known for, let me show you. So it's just is to show you that what you have come to learn is not something that you joke with at all. $10 billion on a single day, and this is 1992. It was called Black Wednesday. The man who broke the Bank of England as a result of a short sale of $10 billion worth of pound sterling, which made him a profit of $1 billion during the 1992 Black Wednesday equity crisis. So since 19, this is a human being. He's not a ghost. He has an hedge fund. He did this with a result of worth of $10 billion. He did 1 billion profit one single day. Market no shake. If you make $10 billion now, market no go shake. You understand? If you make $10 billion now, market no go shake. So what's this rush? The market is there for you to make any amount you want to make. There is no rush. So I want to see myself breaking this record, and it will happen. I'm telling myself since the day I discovered this man, I tell myself every time that every record is set to be broken, and every broken record is broken to be broken. So the way I operate is when I see a record that has been set, I say, "Oh, well, time to break record." When I see a record that has been broken, it's time to break that record. So I don't know how it will happen, but I know that I go break this record. I want it happen, you know, concern me. This man no get to it. You no get to it. He's also a trader. And when I was going through his background, the guy started from a low, humble beginning. He was one, Joshua was 13 years old in March 1994. You don't understand. Joshua did not become, he was once 13 years old. At 13 years old, he was not a trader. You know, I like thinking deep. See, George Soros at one time was working a job, an ordinary human being. Just see, read backgrounds, biography of traders that have made it. You understand that do it. You don't. Why not you? Why can't you do it? Like why? In 1969, he set up an hedge fund with $4 million investors capital. All these things, he started it after some while. He did not start it from 13 years old. I mean, I'm trying to open your mind to show that nothing is impossible. If you say I'm going to do this in this trading, you do it. In 1966, he started a fund with $100,000 of the firm's money to experiment with his trading strategy. Can you see? $100,000 to experiment. In 1970, he founded Soros Fund Management and became its chairman. He had issues, he resigned from the management, blah, blah, blah. So many things happened. So it's a journey, it's a process. See, in 2013, the fund made 5.5 billion, making it again the most successful trading fund in history. The fund has generated $40 billion since its inception. Now, this is around the year. Around the year billions, 300 million, 50 billion, 100 billion. Uh-huh. Trading is not a we are not you don't understand what I'm saying. You know they feel me. Around the year billions, billions, millions. You are talking figures. So these are people that I see that make me think I'm crazy. I'm not crazy. I've seen people do it, not once, not twice, and they are human beings. They're not ghosts. They're not animals. Even if nobody has done it, I'll be the first person to do it. That's the idea. I repeat, even if nobody has done it in the forex space, whatever it is, whether making $1 trillion or anything, I'll be the first to do it. How much more when somebody has done it, right? So enough of ranting. I hope I've opened your mind to something. That trading is not a game to come and play small. I'm going to say it now again live. I have left the era of making 1K days. I've done that count. Yesterday I made over 1K in my trade. I've done that not once, not twice. Over I think I count more than 5 to 7, 8, 9, 10 times. So I've left the era of making 1K days, and it's a process. If you have never made 10K, you can't make 100K. It's a, unless if you try to make 100K without making 10K, you you fall back to that 10K. So the next milestone now is to start making $10,000 days. It's a process. I won't just jump to 10K days. So why I know for sure that I'll make 10K because I've made series of 1K. So now it's time to make 10K. After 10K days, it's time to make what 100K days. This is trading for you. There's no business that you can say I want to make 10K, I want to make 100K, I want to make no. It's trading. Then the next days they are going is $1 million days. It go happen na every day. I will come back to this live and said I've just done $10,000 profit today. I've just done $100,000 profit today. And every day it go happen. Let's go back to the chat. So I'll just do a brief. So yesterday was Euro USD was a bad trade for me. I was looking at selling Euro USD, but gold was my savior. Gold saved me yesterday. Okay, now gold made my 1K dollars. So yesterday EU slimy, gold saved me. So EU was the sly yesterday. EU slide, gold saved. EU slides, XAU saved. But on the normal day, now XAU they slide. Now EU they save. But today, yesterday na EU slide. EU slide. All right. So what I was not paying attention to because I was already fixated on selling USD. So that took my mind away from what I was seeing. It was actually a clean buy. Okay. Let me see. Okay. Come on. I'm looking now. So it was actually a clean buy, but I was already fixed on what's selling. So I did not see this buy coming. Actually, it was a very, very I like no now, ProFx now. Why you do like this? It was a very, 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 very clean buy. Very so we learn every day. We learn every day. This was a clean buy. So Asian low was swept into this area of value, which is fair value gap, and that was it. That was all for yesterday. That was all. I'm coming up. This was all. Oh. This was all. Oh. Okay. Asian low was swept into area of value of fair value gap, and we closed with a confirmation. This is a reversal pattern. One of my mentees asked me, "ProFx, how do we know confirmation? How do we know when to sell or buy?" And I told him there are two confirmation entries. Okay, one, let's write this down. One is candlestick pattern. Can you see? we have a morning star forming in the location. So two types of candlestick, sorry, two types of confirmation is one, candlestick pattern. So we have two types of confirmation entry. How do you know when to buy or when to sell? How do you know when to buy? I call that confirmation what entry. How do you know when to buy? How do you know when to sell? Number one, number one is what? Candlestick pattern. That means you want to see a certain pattern form on your location. On your location. In this case, at the fair value gap, we saw a clean reversal pattern, drop, base, rally. This is a three pattern candle. This is called evening and morning star. Your entry is going to be at the close of the third candle, and your stop loss is below. That's all. Your take profits is going to be at the previous high. In this case, London high, which is here, 1 to 2, 1 to 3. You're done with that. So the idea is that your entry is at what? Candlestick pattern. Then your second entry confirmation is what we call market structure shift or change in state of delivery. Market structure shift or what? Change in state of delivery. Market structure shift, change in state of delivery. So the first entry pattern, the first entry confirmation is candlestick. The second confirmation is structure. You understand that now? The first entry confirmation is a candlestick pattern. The second confirmation is a structural pattern. How do I mean structural pattern? I will explain now. No matter this is not strategy. This is actual. This, if you check, ask anybody, any trader, how do you enter the market? It's either you are using candlestick to enter or you are using MSS. This is not your opinion. This is objective. I want to get confirmation entry, candlestick patterns, confirmation entry. Number two, change market structure shift or change in state of delivery. Ask any trader, how do you enter the market? Is this two? You know, past this two. So you want to wait, you want to have a location first, you want to have a demand for a buy, support, or your trend line, whatever it is you're using. When a candlesticks now print out on that location, then you're looking for what to buy or sell. So the second one is what? Market structure shift. What that means is that as price is coming to your location of fair value, for example, if we are buying, we already have a bullish structure, right? We expect price to come into location. As price is coming to location, we are pulling back with a bearish structure in lower time frame. Okay, so I want to see price give me a shift in market. That means I have been selling towards the location, but once price has started into my location, I want to see that price has shifted structure and I wait for a pullback, then I buy. So this is the change in state of delivery. So this confirmation has to do with structure pattern, while this confirmation has to do with candlestick pattern. I'm teaching good. Your first confirmation has to do with candlestick pattern. Your second confirmation has to do with structural pattern. In this case now, a change in state of delivery or market structure shift. If you enter, type in enter. Give me some fire, fire, fire. We only have two confirmation patterns. You know, past two. You're either using candlestick pattern or you are using structural pattern. Tell me again which one they. If you have something else again that you use, let me know. If you have something else you use for entry, let me know. So our job is to help you filter the noises. We are all doing the same thing. It's just know the one that works for you. Know the one will work for you. We are all doing the same thing. Know the one that works for you. So for me, I will show you how to use structural pattern now in this same trade. Um, I'll show you how to use structural pattern. So let me type this in. I'll type in structural pattern confirmation. Structural pattern confirmation entry. And we call this market, which is market structure shift. So in brackets, MSS. Is that clear? Structural pattern confirmation entry, which is market structure shift, MSS. So um, so then this one is going to represent candlestick pattern confirmation. Sorry. Okay. This one is candlestick pattern confirmation entry. Candlestick pattern confirmation entry. Candlestick pattern. Is it clear? Do you understand what I just said now? Candlestick pattern confirmation entry. Right? Candlestick pattern confirmation entry. So we have one pattern. We have double pattern, and we have triple pattern for this confirmation entry. So example of one pattern candlestick is what? Who can tell me? Who can tell me example of single pattern candlestick? Who can tell me example of single pattern candlestick? Who can tell me example of single pattern candlestick? This is triple pattern. 1, 2, 3. Reversal pattern at a morning star. Who can tell me example of one pattern candles? Anybody? One pattern candle. Then someone else tell me example of double pattern candle. I need one pattern candle and double pattern candle. Who is answering the question? Example of one pattern candle. Example of one pattern candle. Break of structure is not a candlestick now. Example of one pattern candle is your pin bar, is your doji, is your hammer. Yes, Francis. One pattern candle, doji, hammer, pin bar, one pattern. So when you see a doji form in a location, you want to see an extra candle to give you a confirmation. Okay? So when you see an hammer on a location, it don't be. You don't need to have an extra candle again. But a doji is indecision. So a doji must need a confirmation to enter. But hammer don't need confirmation. Pin bar don't need confirmation. Once you have seen hammer or pin bar on location, you fire. Unless you want to be conservative, you now want to wait again. That's what. Then two pattern is what? Engulfing candle. One pattern two is marabuzu. So one pattern you can have marabuzu, yeah, pin bar, marabuzu, hammer, doji. That's for one pattern. Then two pattern you have engulfing candlestick, engulfing and arami. Engulfing is when the second candle, the first candle. That means I want to see if I'm buying, I want to see a bullish candle engulf the previous candle. Arami means that the second candle is inside the first candle. So in a location, I have a red candle and I have the small green candle. That green candle is a confirmation. So that's Arami. We call it inside baby. Then to be conservative, you want to wait for maybe the third candle to confirm. But that second candle that is inside that first candle on a location is your first confirmation. We call that Arami. Then the third triple candlestick is what you have as your morning star, evening star. Like what I just showed you now. A morning star is a drop, a base, and a rally. A red candle, momentum red candle, doji, and what? Rally, momentum green candle. So those are the confirmation for candlesticks. Then if you don't want to use candlestick, you want to use structure, it means that you are waiting for a shift. Price will be selling down to your location. The first shift in market structure is a confirmation. Wait for a pullback, you enter. If you are catching the fire, type in fire, 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 fire. Value, 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 value. Value, value, value. Does this make sense? Please. So I want to see how structural pattern works here. Now, on 15 minutes, 1 minute is your time frame for market structure shift. At best, 5 minutes. You can't get market structure shift at 15 minutes. If you are day trading, you go late. It will be too late. It will be too late to get a market structure shift on 15 minutes. So your time frame, pay attention, guys. As a day trader, your time frame for market structure shift is 1 minute to 5 minutes. Your time frame for a market structure shift is what? 1 minute to what? 5 minutes. Your time frame for your market structure shift is on what? 1 minute to 5 minutes. So let's go to 1 minute. Let's go to 1 minute. As price is pulling towards your fair value gap, it's going to be giving you what? Bearish market structure, right? As price is pulling into your fair value gap, it's going to be giving you what? Bearish market structure. Your job is to wait for a shift, a shift, a shift that confirms sellers has lost control. Okay? We no go gree for markets, eh? We no go gree. We will master it. We will be patient to learn it, and we will get it. We will get it. We will get there. Just ensure that you are doing your job. Master it. Practice. Study. Keep on doing what you are supposed to do. Don't worry. You will get there. Now look at it. Your first job is look at it. Lower high, lower low. Means that I want to expect price to break this block. So here we can apply what is called breaker block. Yes, that means a shift in market structure is when there is a breaker block. That means price has broken the recent resistance. The resistance has been broken. The other block that was supposed to be respected is this guy. So we have lower high and what? Lower low. I expect price to what? To break, to shift means that I want to see price break out of this and come back as a support. So resistance has become support. As price has broken out of this, it came back. The next candle that prints, now I'm back to candlestick again. You can see I'm using market structure shifts. I'm still using candlestick again to confirm my breaker block. Or you just use by pending order. So there are two ways to enter eventually. Even in your structural pattern, you will still need candlesticks to enter. If you are going conservative trading, look at it. After price gave me lower low, it gave me higher high. It respected my breaker block and what printed and closed above 748 or 749 is your entry. 748 candle, 749 candle is your entry. We are still applying candlesticks. In fact, if you are using instant markets, right? If you are entering on instant markets, you are entering with the candlestick close. So when people say I don't use candlestick, I like, are you okay? If you are doing instant market execution, they're using candlesticks as a confirmation. Are you aware? Like, let's talk. Are you aware that if you are using an instant market execution, that simply means that your confirmation is a candlestick pattern because you are waiting for a candlestick to close before you enter. Yes or yes? I'll repeat again. If you are using an instant market execution on the market, it means that unconsciously, unknowing to you, you are using a candlestick confirmation pattern. That means you want a candlestick to close before you execute. That's it. If you are using a pending order, it means you are using a structural shift pattern. A structural pattern rather. You're not expecting candles to close. You want price to get into a certain level and you set a pending order. So people apply some strategies unconsciously, unknowingly. Are you aware that every trader unconsciously uses accumulation, manipulation, and distribution? Every trader unconsciously uses CRT. Every trader, because if you are using candlestick, you're not just seeing it in that light. I for one too, I was using CRT unconsciously. I was applying CRT unconsciously. It was when I watched CRT videos. I was like, this is CRT I've been doing now. It now made me to now know it more. Okay, I now become more competent. I became conscious competent. If you are operating from unconscious competence, you will not do too well. I repeat, if you are operating from unconscious competence, that means you are doing some things right, but you don't know how you are doing it. You don't know the reason. You don't know the how to you're doing right. You would operate excellently. But when you are doing things well, consciously, you know what you are doing and why you are doing it. You can scale up that excellence. So I want us to go from unconsciously applying some concept to consciously applying that concept. Yeah. Have I said something good? So my point is, look at this. If I'm using a pending order for this entry now, as price has broken out of this, I'll just put a pending buy limit at my breaker block. My stop loss can be, because of liquidity, I can put my stop loss below this guy. This is 5 pips for crying out loud. 5 pips stop loss. My buy limit on breaker block, my stop loss at the liquidity is 5 pips. My take profit, of course, because this particular trade is the trade for the day. You can just leave this trade till 10 o'clock because your trading window is 7 to 10. If you are trading London section, your trading window is what? 7 to 10. So let's see let's see where the risk to reward they gave us. If you had left this trade for 7 to 10, let's see the risk to reward they gave us. Can you see how the market went? It gave us over 1 to 7, 1 to 7 thereabouts, 1 to 7, 1 to 8. So the reason why this guy bought yesterday was because it respected what the fair value gap, and we had a market structure shift in the location. Okay. Now, assuming that we are not using pending order, if you are to use a candlestick confirmation with a structural pattern, what is going to be our stop loss? If you are not using pending order, but want to use a candlestick close, where will your entry be and where will your stop loss be? Let's go, let's go, let's go, let's go. If I was to use a candlestick close, where will my entry be and where will my stop loss be? First, there must be a what? A shift, right? There must be a shift in structure. Yes or yes? There must be a shift in structure, and that shift is your breaker block. All right? There must be a shift. So where will my entry be? The candle that closes above my breaker block is my entry. And that's 748 or 749. So let's even say we use 749. 749 entry. My stop loss will be below the breaker block. That's 3 pips. Can you see now? I've reduced my risk. 3 pips. 3 pips stop loss. So let's go. Let's look at what we have today. What do we have today? 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 Let me on my Euro USD today. Let's go back to higher time frame and see where we are from the buyers. So it seems the bulls, the buyers, no one agree for this week. So when I went back to my higher time frame, I was checking my weekly time and I saw that okay, there is an order block far left that I want price to not break. If not, we are buying continuously to the next high. So what I did is okay, I set my higher time frame weekly level at this resistance, which is order block. Okay, that's what I did. That's step one. So we are currently at the resistance. We are currently at what? Resistance. weekly time frame. Weekly time frame. Okay. This is week 1, September. Week 2. For me, I still expect, because week 1 and week 2 was accumulation and manipulation. So I'm like, why is this week still buying? But the market is the market, right? I expected that I to start distributing, but the market is what is the market. So maybe this buy is just like an extra manipulation. We want to sweep this high and start selling, maybe. But we are going to find out from the market. Market will tell us what to do. I know they want to tell the market what to do. So this is my weekly key level. The first week, the second week manipulated the first week and closed back into the range. Now the third week is now trading above the first week high, second week high, which you don't want to see. Weekly bias is done. Let's go to daily bias. For daily bias, Monday has closed high and low. So I might want to see what today will look like. I might not want to trade today if I don't see a clear opportunity, because Monday is accumulation, Tuesday is manipulation. So most of the time, Monday serves, not most of the time, all the time, Monday serves as accumulation. Not most, I mean all the time. All the time. The first day of the week, okay? The first day of the week is what? Accumulation. So Tuesday will either be manipulation, that's a sweep, or a run. Are you together? Monday will always give us the range. Monday will always give us the range. Now, Tuesday is a question of, will Tuesday run Monday's high or will close above Monday's high? All right. So, like I said, experienced traders will want to trade manipulation candle. But for beginners, you want to wait for that second candle to close. I repeat, experienced traders will find a way to trade the second candle manipulation. But beginner traders don't trade second candle. After accumulation, you wait for accumulation. You wait for the next candle to either close above this high or manipulate and close back into the range. Okay? So experienced traders now, let's talk. This is manipulation candle. So on 15 minutes, let's see what we have as second candle is forming. So we are currently trading above previous day high, right? For me, this is already, this is continue buying. This is a bullish continuation. Okay, we are above Asian high without manipulating Asian low. So if this guy will continue buying, what do I expect? Just a pullback. Okay, in this case now there was no Asian low manipulation, right? There was no Asian low what manipulation. This means London is buying. London session will buy. Okay, at least, at least, at least, London session is bullish. Now, New York might now reverse the value. Okay, New York might reverse the buy, but London is set to be bullish. What do? I just wait for a retracement. Since this is a break of structure at the middle of my Asian range or at the origin of Asian range, that's where I'm looking to buy. Okay, I'm looking to buy at the middle of my Asian range or at the origin of Asian range. Are we together? I'm looking to buy at the middle of my Asian range or at the origin of my what? Asian range. That's London trade for me. New York might want to do a reversal or a continuation, but London, from what we are seeing here, is already set to what? To continue the buy. And mind you, the buy might not even stay longer than this other block. That's why we have to draw the weekly time, the weekly buyers. We already have a weekly buyers here. So maybe price wants to go and respect this middle line of the weekly order block before it now starts selling. We don't know. So our job is to follow what? To follow the structure, to follow markets, right? So we innocently follow what? Follow the market structure. Follow the market structure. Follow the market structure. So we are bullish until otherwise. Until otherwise. This is a break of structure. Yeah? Break of structure, inducement, order block origin. So we are still bullish. We are still bullish. Let me take it off again and show you. From a structural perspective, we are pretty much bullish. We are pretty much bullish. Okay? So if either price comes to respect this for a buy, like I said, or price comes to respect this demand for a buy, we are pretty much bullish for the London session until otherwise, until otherwise, until otherwise. So I keep my fingers crossed for a pullback and a continuation. I'm careful. I'm careful for my weekly buyers. So I'm not going to be lost with buying. I'm careful. I'm careful. I'm careful. Okay. This is a weekly key level liquidity. So I won't be lost in the buy because we're already at the resistance level. So this is the nearest liquidity level. In fact, I think I'll stick with that. I'll stick with this key level, right? I'll stick with this particular one. Okay, other ones are far, 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 far left. So this is my recent weekly level. So most probably price wants to what target this guy for a buy. So let me go back to 15 minutes or 30 minutes. Yeah, 30 minutes. So that's my target. Okay, this is my target. So this is the higher low. Okay, from here, if price pulls back to this place, then I can also draw a Fibonacci from here to where the pullback is. Can you see that we are heading towards that level? So we are bullish on Euro USD, guys. We are bullish on what? Euro USD. Until otherwise stated. Until otherwise stated. Okay, so do you have any question? Um, yeah, so we just chill. We chill, we chill, we chill, we chill, we chill. Let me on back my Asian indicator. So that's it, guys. That's it, guys. So I wait for price to come into now. Like I said, my confirmation entry is in two, right? It's either I wait for a candlestick confirmation when price gets to my order block, when price gets to my order block or my demand, I wait for a candlestick confirmation. Or on 1 minute, I wait for a what? A shift in structure. So two things. On 1 minute to 5 minutes, I either wait for a shift in structure or I wait for a candlestick confirmation. Right? So 1 minute is the time frame I want to be in. Because sometimes 3 minutes won't give you the early. Yeah, 3 minutes won't give you the early. Let's see if 3 minutes gave us something yesterday. 3 minutes. Did give us something? Did give us something yesterday? Let's see. Let me see if you can. 3 minutes. 3 minutes. 3 minutes. 3 minutes. 3 minutes. Okay. Ah, no, 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 no. Same, 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 same. So 1 minute is fine. Yeah. So we work with 1 minute. Yeah. 1 minute. 1 minute. 1 minute. 1 minute. Yeah. We work with 1 minute, guys. Yeah. So 1 minute is the perfect time frame for our shift. This is why I use 1 minute. It's not because I want to be catching sniper entry or catching this. It's because it gives me my best. It makes me see the market earlier than anybody else. Those that are claiming that 1 minute is noisy because you don't know how to use 1 minute. 1 minute is noisy because you don't know how to use it. 1 minute, you go catch them early. You catch it well. So 1 minute is the entry for shift, right? 1 minute it is. So I'm waiting for my 1 minute. If I'm using a shift, okay, if I'm using a shift in structure, I'm waiting for what? A pullback into this block, right? And a shift. That means I want to see this happen. Pay attention carefully. I want to see price pull back into my first location and gives me a breaker block. Then I buy. This is what I want to see. Yeah, for this. It pulls back into the block and shift structure. Yeah, that is what I want to see. Then the second one will be coming to the 30 minutes order block, which I don't really think is going to do. I can't say, but I think it's going to use the first one. Well, the market is the market, right? So I feel it's going to use this first one. I feel so, but we can't still say. Yeah, we never can tell. Yeah, never can tell. But this is a more likely one to be used. 30 minutes order block. Yeah. All right. So that'll be it for today. Let's proceed. I don't think I have anything else. So this guy is heading towards. Wow. I'm not thinking I shouldn't have closed this trade yesterday, but it's all good. It's all good. When it comes to gold, gold, I would advise that for advanced traders, don't have TP on gold. Trail your stop. Have a stop loss, okay? Trail your stop at key levels. Because there are times whereby, like this particular day now, I've taken profit here yesterday, but price is still heading towards the bank level of 1,000. So if I had not taken profit, I was trailing my stop below every key level, every liquidity. Now this guy will still be in profit by now, but I've learned. So a better way for me to manage my trade next time is to trail stop. If I am sure of my destination, I trail my stop, right? So that you will not cut your winner short. Trail stop, trail stop, trail stop, trail stop, trail stop. Yeah. So guys, that'll be all for today. If you are new here, I don't know if you have new persons here. We have a group where we a general group invite friends. Reach out. If I'll stop dropping the link to the group now. Just reach out to me. Reach out to me on my WhatsApp. Right. You can share my contacts to every other person that you feel or you think needs this knowledge. WhatsApp, WhatsApp, WhatsApp. Let them reach out to me. I will add them to the group myself. Right. I want serious traders, serious ones, that those that are taking this trading skill as a business, taking this trading skill as a career path, are those that I want in my circle. Serious traders. So if you have anyone like that, if he's not serious, don't bring them to me. Anybody who not serious, don't bring them. Those that want to learn the skill professionally, as a business, as a skill, as a career, you're welcome to my DM. That'll be it for today. See you tomorrow. See you in the group. Cheers.